Bem, voltamos. Suitability. O nome pode parecer complicado, mas o significado é bem simples. Adequação, compatibilidade, se nos permitirmos uma tradução livre do inglês. O suitability já é um conceito bastante comum nos mercados norte-americano e europeu. Consiste na prática da instituição verificar se o produto recomendado ou pretendido pelo cliente está adequado ao seu perfil. E o terceiro painel de hoje tem como tema a experiência de suitability no Reino Unido no processo de estruturação e comercialização de produtos de vida e de previdência. Essa palestra será feita em inglês. Nós temos disponíveis os fones com tradução simultânea. As nossas recepcionistas estarão à disposição de vocês para que consigam os fones. Basta levar a carteira de identidade com foto, ok? E como palestrante convidado, nós convidamos o senhor Simon Godsave, da Zurich Insurance Group. Vamos recebê-lo? Mr. Simon. Convido também para mediar este painel o senhor Osvaldo do Nascimento, que é presidente da FenaPrev e diretor do Itau, Vida e Previdência. Como debatedores, teremos o senhor Edson Luís Franco, CEO da Zurich Santander Brasil, Seguros e Previdência S.A. Vamos recebê-lo. O senhor Claudio Cesar Sanches, diretor do Itaú Vida e Previdência. Obrigado. E o senhor Ricardo Geraldes, gerente de Departamento da Bradesco Seguros. Temos também mais um participante, que eu passo a convidar agora, o senhor Leopoldo Barreto, que é superintendente de riscos e operações da Sul América Seguros de Pessoas e Previdência S.A. Eu passo então a palavra para o nosso mediador, o senhor Osvaldo do Nascimento. Senhor Osvaldo, por favor.
Boa tarde a todos. Aqui, como vocês observaram, a palestra será em inglês, então é importante aqueles que necessitarem retirar o equipamento tradutor na entrada do salão. O tema, objeto da palestra, será a experiência do suitability, tá certo? Especificamente a experiência do suitability no Reino Unido. Nós estamos num momento muito oportuno para essa palestra. Conforme vocês sabem, a partir do início desse ano, especificamente no segmento de Previdência, nós tivemos a regulamentação a 4176, que tratou da questão do alongamento e desindexação das carteiras. Obviamente, observando tratar-se de veículos de aplicação de longo prazo. E, com o alongamento e desindexação, obviamente o mercado se apercebeu que nem todo mundo está acostumado a fazer aplicações de longo prazo em cenário de taxa de juros baixa. Então, nós percebemos que uma das nossas grandes prioridades está ligada à educação financeira, educação securitária, educação previdenciária. Então, a educação acaba tendo um peso altamente relevante. E, como prosseguimento à regulamentação 4176, que trata da desindexação e do alongamento, tem a revisão da resolução do Conselho Nacional de Seguros e do Conselho Monetário Nacional, a 3308, que trata da regras de alocação dos ativos, dos planos de previdência, e deve abordar outros temas, flexibilização na alocação dos ativos, deve abordar a questão do alongamento e desindexação, tipificação de planos em função do momento de vida em que o cidadão se encontra e um tema que, de certa forma, já faz parte de uma pauta junto à SUSEP, que é o participante qualificado. Participantes que têm um perfil para fazer determinado tipo de aplicação, obviamente, com um maior nível de risco. E, sem sombra de dúvida, nesse contexto dessas regulamentações que estão em curso, A avaliação de risco da carteira do cidadão, seja ela de curto prazo, médio prazo ou longo prazo, como é o caso específico da Previdência, e a avaliação do perfil de risco do cidadão, ela passa a ser determinante nesse processo de educação financeira. Então, eu acho que a experiência que vai ser aqui apresentada do suitability tem a ver com um tema que vai nos afetar diretamente a partir dos próximos períodos. Eu acho que o Rossi apresentou os números da Previdência. Nós já estamos falando de um mercado que tem um total de ativos de 350 bilhões, mas que no intervalo de 4 anos vai chegar a 1 trilhão. 1 trilhão de recursos aplicados certamente implicará numa grande diversificação em termos de alocação de ativos e numa população bastante heterogênea em termos de apetite de risco. Então, essa questão do suitability de fato, qual é o apetite de risco, qual o perfil que o cidadão tem para fazer frente ao risco que está assumindo, ela passa a ser preponderante no processo de educação financeira. Então, acho que o tema é bem atual e bem presente, e eu vou pedir ao Simon dar início à sua apresentação sobre a experiência do suitability no Reino Unido.
Obrigado, Osvaldo. Boa tarde, senhoras e senhores. It's my privilege and my pleasure to share with you all this afternoon what's happened in the United Kingdom in relation to life assurance and pensions, particularly the regulations that have developed over the years, both generally and for pensions, and how these have dealt with suitability. How do I get to the next slide? Q. Okay. Outline of my talk. I'm going to start by reminding you why life assurance and pensions have a real purpose in our lives, and why we need a well-run insurance industry to serve the public and complement the services and the financial benefits that might be provided by the state. I'll then explain the key components of the market, covering the consumer needs, the government intervention, the products and the distribution that have developed over the years to meet those consumer needs, and how the government sees the development of pensions. And after that, I'll consider a number of specific developments which illustrate some of the good things as well as some of the problems and the challenges that have happened on the supply side, and whether we really have met suitable customer needs. Finally, I'll draw together some overall learnings and conclusions, and hopefully that will stimulate some further questions and some discussions with the panel. I'm not recommending that anything specifically that's happened in the UK has to happen elsewhere, such as in Brazil, but I think the principles and the concepts have got some application. So, what drives the need for life assurance and pensions? Well, the fundamental driver is one of uncertainty. Although we all have to die, none of us knows really exactly when we're going to die, or how long we may need to finance our retirements or look after ourselves if we have bad health. And health is uncertain, and we don't know what sort of medical services we may need. So the whole predictability of our income and our expenditure, and also the wealth that we may to accumulate to finance our expenses, are all big uncertainties in our lives. And also, if we are saving money in assets, those assets may not perform well. So there's an additional uncertainty that comes from accumulating wealth, the asset uncertainty. So basically, the life assurance and pensions products that have been developed by the industry in many, many markets, but particularly the UK, are there to help people protect themselves and their families for all of those uncertainties, from dying too soon, from living too long, or being unable to work and earn a living and earn an income for themselves and their family, or not having accumulated enough wealth to meet your financial objectives. On this slide, I've summarised the main categories of life assurance and pensions that we would recognise in the United Kingdom. They're probably familiar, but we have a personal market, and we also have what we call a corporate market. This is where employers themselves are setting up benefit schemes and pension schemes for their employees. They're two elements of the market that we have today. We have various product sets within all of those for savings and wealth. And the supply of those products can be substituted to some extent. So, for example, banks can offer savings products that complement the sorts of savings and products that the life company offer. We heard earlier on about the ageing population and life expectancy. Not a surprise that that's been one of the driving forces in the UK. We've seen significant improvements in life expectancy over the last century, and some of the figures are on this slide in here at birth. The ages that we have today are still increasing even more. The reasons for that, partly it's medical advance, partly better health, better standards of living. And in the case of males, many people died in wars in the past, and we don't have so many wars nowadays, or certainly wars that involve human beings. They're more technology related. And I think the similar pattern's true in Brazil. You've got an increasing profile. There's always a differential between the age of death of males and females, but the basic trend's the same. Life expectancy, it's a good thing. We all like to think we're going to live longer, but there's another side to the coin. The longer we live, the more money we need to look after ourselves. So it's an interesting balance when we look at life expectancy. Can we afford to pay all of those costs? That's the big question that the government and the private sector has been asking itself. Can we all save enough money, or can we get enough money from taxation revenue to fund all the expectations of healthy retirements into our 80s, 90s, and sometimes beyond? That's a key question. So the context for all of that. Then when we look and see, well, how much have people actually been saving? Have they been saving enough? Whether generally or whether specifically in pensions, because pensions is just an earmarked form of savings. And this slide here, I've taken those people who were aged 50 to 64. So they're still working, and this is the state of their savings in the final 10 years or less before they then start thinking about retirement. Have they got enough money saved? And this shows the money that's saved in different means. Sometimes in their property, sometimes they just got general savings, and sometimes in their pensions. What's interesting here, one column is the mean, i.e. the mathematical average, and the other is the median, i.e. where the 50th percentile of people by count are. And when you look at the median figures, you see here by number how little savings other than pensions people have really got. So if you think that, yes, we've had increasing prosperity in Europe, in the UK, it hasn't translated as well as you might think in terms of people's savings. The average mathematical mean is higher, which means that the very well off, the high net worth type customers are actually bringing the average up, and they're doing quite well. We've basically got a haves and a have-nots in terms of savings for pensions in our country. State pensions aren't on here, and you might say, well, why isn't there another line called savings in state pensions? The reason is the state pensions that people get in the UK are funded from taxation revenue, pay as you go. They're not funded from any funded scheme. So the pensioners, the state pensioners, are dependent entirely on taxation. Oops. Not working. Right, so one of the typical things one does when one retires is you look at how much you've got in your pension schemes or your private pension plans, and then you consider taking an annuity. Quite typical, and I imagine many markets, including Brazil, that's probably still an option. So how much can you get from an annuity? When I go back 20, 30 years ago, we were illustrating annuity rates of 10, 12% per annum based on the fund. Today, they're more like 3, 4, 5%. So you build up a fund, and all you're going to get is an annuity income each year until you die of 3 or 4 or 5% of what you've saved up. Doesn't sound a lot. Why is that? Well, there's been a couple of factors, and I've shown on here the figures for a male. European law changed in December last year, which has banned insurance companies from offering different annuity rates for men and women. We have to offer a gender-neutral annuity rate. So what that means is males get a worse annuity rate, females get a better annuity rate. It's the opposite when it comes to protection, like term insurance, where males are going to get a different position than females. So that's one factor influencing that, is European law. Another factor is most of the insurance companies are using treasury bills or gilts to back the promises they make when they give guaranteed annuity rates. The money markets have changed dramatically post the financial crisis. So, big change. So, if you want to retire, you have to save a much bigger fund now to get a reasonable annuity to maintain your sort of lifestyle. And many people, as we saw on the previous slide, haven't built a big enough fund up to generate that. You know, we saw the median savings was in pensions was about 150,000, about half of what you'd need to generate an annuity of 10,000. So that's a big issue. One of the big pensions public policy issues, indeed, and I list them all on here, personal responsibility is something that's been emphasised a lot, and I'm sure that's true in Brazil as well. We've had a very strong welfare state that's developed since the Second World War, and many people still think, oh yes, don't worry, when I retire I'll get a lot of benefits from the government, I paid my taxes, I worked for 40 years, everything will be sorted out. No, because we just can't afford it. The government and the taxes say you can't afford it. So we've been trying to impress upon people they have got to take personal responsibility for their own financial well-being in retirement. Tax incentives have been a major factor. Again, I'm not sure what the regime is here, but what we have in the UK is there is tax relief on the contributions you make into a pension scheme, and then when you take the benefits later, when you retire, you then pay tax on that income, just as if it was earned income. That's been a major stimulus. If we take away some of those incentives, as indeed has happened from time to time, you suddenly find the level of savings in pensions has gone down. So it's a major public policy tool. But tax relief costs a lot of money in the current year, because it might be 10, 20, 30 years before the government's getting that tax back again, having given that relief. Should we give private pensions products available to everybody? Until recently, they were only available to certain categories. Initially, they were only available to self-employed and people who were in companies' pension schemes. More recently, we've been allowing people all over the country, including non-earning housewives and house husbands, to save in pensions. How much choice should we give? We have a market in the UK where we like to give people lots of choice of funds, and indeed for pension savings you can invest in all sorts of assets, some of which are risky, some of which are not risky. The riskier assets obviously give you a higher return, the less risky assets give you a lower return. So we give people a lot of choice. The government has been concerned really about key outcomes at the macro level. The level of annual pension savings is too low for many people. So what can they do to stimulate rising annual savings? The accumulated funds themselves aren't performing well enough, and in some cases the charges from those funds is eating away at the investment performance. So what can they do, and what can the economists advise to get a better value for money outcome at the national level? The financial services industry has offered solutions to many of the pensions initiatives over the years, but I would say one of the key factors, and I'll come back to it later, is the industry has thrived on commissions on products, and that's been the main motivator to going out and selling products. And also life insurers obviously need to get a commercial return from the products as well. And then it's not just the insurance companies. As I said before, employers have a responsibility, and many employers offer pension schemes. Some of those employers haven't adequately funded their pension schemes, and some of the schemes have gone bust. And what happens then is that the employees who think they've then got a benefit, and indeed some of those in retirement, no longer have that pension, that annuity. And all those employees or ex-employees have got is to then rely on the state because their scheme's gone bust, no protection. And then we had mis-selling of private pensions products, and I'll touch on those later. But the biggest issue for the government is the scale of the public sector pension payouts funded by taxation revenue, as I said before. We have a GDP in the UK of about £1,600 billion. Of that, 675 billion, somewhere in the 30% is public sector spending, of which 21%, large chunk, is to do with pensions. 12% of that, 21, is paying state pensions for everybody, and 9% is paying the pensions for public sector employees. So if you work for the government or the civil service or the armed forces, you'll get a pension in retirement, but it's paid for out of taxation revenue. It's not paid for from any pension fund. So that gives you the scale of where we are. Then if we look at the old age dependency, and that was a matter that was talked on this morning in one of the talks, those aged 65 years or more have formed an increasing proportion of the population over recent decades, and that trend's going to continue. If you have a look at the table, and I've sort of gone in 20-year gaps, we had 11% of the population was over 65 in 1952, and that had risen to 16% last year. And then if you look, it's then projected to go up to 23% in 2032. 20 years ago, we were projecting the 23% by about 2022. So something slowed down, and what happened there was the government encouraged immigration, and more countries joining the European Union, and the freedom of movement of workers across the EU meant that the UK was taking in many millions of people, typically for work. So they were coming in, they were working age, not elderly, and they were also paying taxes. So what it happened was the population increased, and we were able to defer the time bomb, if you like, of old age dependency. But that time bomb will come to pass, and it's probably the biggest single underlying factor over the very long term, and I'm sure it'll be a similar issue in Brazil. So we've had some key laws that have been made by Parliament over the last 30, 40 years. We've had a couple of insurance company acts, which were primarily focused on the capital and the prudential side of the business and the financial soundness of insurance companies, because obviously we don't want insurance companies to go bust. If they're helping to solve these problems of protection and pensions, we want the insurance companies to be financially sound. The Banking Act in 1979 really gave the powers to the Bank of England to oversee banks and make sure banks were sound. And then we had the acts which really created the regulatory framework. The first one was 1986. We had a Financial Services Act, and that set up a new coordinated framework of self-regulatory organisations. So it didn't set up statutory regulation. And then in 2000, we then had the Financial Services Market Act, which created the FSA, the Financial Services Authority, which became our first statutory integrated regulator. The government decided to split the Financial Services Authority into two. So from April this year, we now have two primary financial services regulators. We have the Prudential Regulatory Authority that's part of the Bank of England, and that looks at the capital and the prudential side of banks and insurers. And then we have the Financial Conduct Authority, which oversees conduct for all companies in all industry sectors. So this slide is a picture, and you can You don't need to worry about all the acronyms on there, because I'll talk about those in the next few slides. But basically it shows that over the last 25 years, 1988 taking us up to date, we've had several eras or several transitions of the regulatory framework, and the fact that we've had changes, I think, has been a problem. If we'd had one regulator and it had improved but basically stayed as one, and dealt with some of the issues through improvement rather than through radical change, I think we would have learnt more lessons as we've gone along. Instead of that, we're forever catching our tails, I think, in the UK. Basically, you can see that things have changed in several directions. So, 4 main eras that I'm going to talk about. The first era was the Financial Services Act-driven self-regulatory organisations. Second being the Personal Investment Authority, which merged a couple of those together, and then the two big eras of the statutory regulation. And throughout that period, because the UK had joined the European Community, now the European Union, in 1973, throughout that period you've got increasingly European laws which then drive some of the regulations and the UK laws. But prior to that, the UK set its own rules and its own laws. So the first era, which was the Lautro and FINBRA, the Life Assurance and Unit Trust Regulatory Organisation, which was the product providers and the tied agents, and FINBRA, the Financial Intermediaries, Managers and Brokers Regulatory Authority, which really looked at the brokers in the marketplace. 2 similar but different bodies. And their scope included life insurance, personal pensions and retail investments, not banking and not general insurance. The focus was very much on selling and disclosure, and monitoring and supervision of members was relatively light touch. There were limits to the maximum commissions that a life insurance company could pay, so they were set out. There was a formula for each product. Here is the maximum you can pay. Previously, there had been commission wars, and the life companies had always tried to increase the commissions to try to get sales through the brokers. And also, we had something called polarisation, which meant that either if you were a financial advisor, you could only be independent and you had to recommend a product across the whole of the market, or you were tied to a single life company. You couldn't be anywhere in the middle. You couldn't have a panel. You couldn't recommend from 2 or 3. It was all or one. That was an interesting concept. The idea was to try and make it very clear to the consumer what was being represented. The rule book covered lots of requirements for selling and marketing, documents that had to be given to the customer before the sale and after the sale, training and competence for the advisors to make sure that they were fit and proper, as well as some more generalised rules for doing conduct of business. So that existed for a few years, and then the PIA integrated FINBRA and Lautro together, so you had a unified set of rules whether you had tied agents or whether you had brokers, so they were all following a common set of rules. Still, we had polarisation, and still the scope was life assurance, pensions and retail investments. So not much change for the product providers in that era. But then, during that era, we had some mis-selling scandals on personal pensions, and the Labour government that came in under Tony Blair with Gordon Brown in the Treasury decided that they wanted to have a large, heavier statutory regulator and also bring banking, insurance and retail investments and eventually general insurance and mortgages into one big integrated framework. And that really was a big change. There was a big launch on the 30th of November 2001 where all of these regulations all changed. There was a big new rule book. So that was the first time we'd had a statutory regulator, and also to some more protection for the consumer, we finally had a compensation scheme if insurers or advisor firms went bust and there were some liabilities. So the product providers and the distributors contributed a levy every year and still do, and that's quite a successful scheme. So that helped to protect consumers. And the other thing that wasn't working well was dealing with complaints. Many of the life companies were not handling complaints very well, and there was no recourse once a complaint had been rejected and you were dissatisfied. You had to go to court. So there was a creation of an ombudsman scheme to deal with complaints once they had been initially dealt with by the industry, and then there was no going to court after the ombudsman. We didn't have a protectionist regulator, but we did have a regulator that was focused on consumer protection. So you know, the risk that we did go protectionist wasn't really there. The FSA had much stronger enforcement powers. They authorised firms and took that very seriously, and many applications to set up new firms were rejected. They also approved people. I was an approved person as a compliance officer, and towards the end of the FSA era, they could fine individuals. I could be fined 40% of my salary, and it had to be paid by me and not by Zurich. So it was a very tough regime. You had to behave properly, and people did get fined, and firms did get fined, and you might know some of the fines ran into many millions of pounds. And that basically was the groundwork for what we've got today. It was, although it had a big rule book, it was also very principled, and there were 11 principles that all firms had to abide by and all individuals had to abide by, like good controls, treating customers fairly, probably being the biggest of the principles. So we had a triple focus under the FSA of conduct, prudential, and also we had prevention of financial crime. Polarisation was eventually abolished in 2005, so if you were a financial advisor, and indeed today, you can operate under whatever business model you want. You can have a small panel, single tie, or independent. But just as the FSA's creation was born of political rather than purely rational motives, so was its replacement. And what we had is the FSA split earlier this year, as I said, into two. The Financial Conduct Authority, the FCA, looks at the conduct of all financial services, and it also is the prudential regulator for investment companies and intermediary companies and distributors. So the Prudential Regulatory Authority covers banks and insurers. The substance of the previous rule books hasn't really changed much, but you've just got this allocation between the two. And the FCA still oversees the compensation scheme and the Ombudsman service. The FSA was tough, but the FSA has even stronger supervisory and enforcement powers. And for example, it now has the power by law to use its judgment and not necessarily go out and get facts, not necessarily to go out and do an investigation. If it thinks there's something wrong, it can say, stop selling that product tomorrow, or change your charges, or change your premium rates, or stop selling through this distributor, or stop selling through this consumer segment. Just decide just like that on the basis of judgment. And that power didn't exist before. It also has a new objective for anti-competition. We did have a competition body, the Office of Fair Trading, but again the government decided it wanted to put an element of focus on competitiveness and anti-competitiveness within the actual regulator itself. But that's quite new, and we're still waiting to see what's actually going to happen. So we have a regulator today, much tougher. I think the industry would rather not have that regime. I think the industry would rather have the FSA and have worked better with that, but the government, for all of its, and the Treasury, for all of its thinking and analysis, chose to go down the approach it has done. Interestingly, our new conduct regulator, the FSA, is recruiting new skills. They're recruiting behavioural economists who can look at consumers, financial literacy, financial behaviour, attitudes to risk. And they are trying to use that to help get a slightly added perspective. I wouldn't say a different perspective, but an additional perspective to what you traditionally see as the role of the regulator in overseeing the industry. Clearly, the two new regulators will have to work together effectively. Pensions, a parallel set of regulatory bodies, interestingly. So we've had on there more stability. So what you can see there on the lines on the diagram are, the first line is really the pensions boards. It's just changed name, but they oversee company pension schemes, the employers' pension schemes, pretty much a constant since 1975. Then we had the development of a pensions advisory service, which is the second line, again just changed its name, but it's there for those employees who've got questions or concerns or complaints about their employer's scheme, and they've got no satisfaction from their employer, so they're going somewhere to ask a question on their behalf, and then the advisory service would then deal with the employer and try and resolve any issues. And then we have the third line, which is an ombudsman to deal with the complaints to do with company pension schemes. We saw we had an ombudsman for the main market with the financial conduct regulator. This is for dealing with company pensions complaints. And then we had the Pensions Protection Fund. It's a sort of a lifeboat, if you understand the meaning of a lifeboat. So if the company pension scheme goes bust, what we have now is an ability for people to go to this fund and draw potentially millions of pounds from the fund. It's funded by a levy from all employers' pension schemes. So you might not get all of the pension that you expected, but you'd at least get a fair amount from that. It's like a compensation scheme. We call it a lifeboat fund. I've added on the bottom something called NEST, which is only launched really quite recently, National Employers Savings Trust. What this is, it's not really in the public sector, but many small employers didn't want to set up their own scheme, but they're required to by law now. So this NEST scheme has been set up as a default scheme. There's a few funds, they're going to be quite big eventually, but they're really a default scheme that any employer can go to. It's cheap, simple, without having to go to the life industry. So in some senses, it's competing with the life industry. How it's going to turn out, I don't know, but it's quite new. So I put it on there. It's a key pensions body. So we've had a lot of developments. I'm not going to talk to any of those, but basically this slide is to show you, and I could have produced a slide which had 100 different initiatives on it over a period of time. But the big initial change was basic state pension for all people in the country, a universal right, which was launched in 1948 after the Second World War. But the reason for showing you the slide is we have lots and lots of legal and regulatory change, very, very frequent in pensions, very complex legislation and regulatory environment. And working in a life company, the people in the proposition teams need to be very well versed in all of these to work out the right products that are compliant and are following all the government ambitions as well. So private pensions then, coming on to the product side of our market. What are the key characteristics? Tax structure, so you get contributions net of tax, and that might be 20% tax relief or 40% tax relief. The funds grow gross, untaxed, but when you get your eventual annuity or you're withdrawing your money from the funds, you pay your tax then, so it's tax deferred. We have occupational schemes run by companies, sometimes by life companies on behalf of those companies, and then we have personal pension plans offered by life insurers where the contract is directly with the individual. Because the rules have kept changing over time, there are lots and lots of old products, and that's one of the problems for the industry, is dealing with that legacy and complexity. For example, in my own case, I've worked for 3 or 4 companies throughout my life. I've got 5 or 6 different pension funds, and each of them is slightly different, and it's quite complicated for even me to work out what am I going to get when I'm 65. Quite difficult, complicated. So that's a feature of the private pensions world. You have freedom to leave your employer's scheme. If you don't like your employer's scheme, you can choose to go somewhere else. You can opt out of the government's, the state additional pension scheme, not the basic scheme, but the additional one. So there's lots of choice, lots of freedom. Some might say too much freedom in there. Until about 2000, the product structures for private pensions were pretty much like endowments. So if you think of them, they're sort of high front-end loading, commission payments, annual charges and what have you. That works when regular premiums or regular contributions keep getting paid. When they don't get getting paid regularly, that product structure doesn't work. And that's what happened in the UK. So the government, in launching private pensions in a big way in the 1980s, thought that people would carry on saving regularly. The industry designed its product structures and paid commissions to advisors for that, and it didn't really happen. Most people who were taking out personal pensions only paid 1 year or 2 years contributions. Then either they changed job, or the new employer had a pension scheme, or they couldn't afford it, and things changed. So we had more intervention as a result of that. But with all of that freedom and all of those choices, because you could choose almost any fund or any asset, there's clearly risks and complexity in terms of what does the individual do and where do they go for financial advice and how reliable is the advice. It's largely the advice market's been intermediated by tied advisors and independent advisors. And the employer-sponsored pensions have been similar, but they've been driven by the big employee benefits consultants like Willis and Aon. So we've had similar markets. On the life insurance side, similar features, and the products are probably more similar to the ones in your own market. We did have tax advantages to encourage people to take out life insurance until 1983. You got tax relief on your premiums. That stopped. So really, life products don't have much tax advantage. Unit linking was probably the big development in the UK. It's one of the first markets to develop unit linking. So many of the life-based unit-linked products are very similar to mutual fund products that you'd get in many markets today. Typically, the products had high front-end charges, high initial commissions. Again, with a lot of variety and complexity and unit-linked fund options, key reliance on the individual with their financial advisor to keep reviewing their financial services, circumstances, their attitude to risk when they're looking to take out their money, if they're using it for investment, have they got enough, particularly when there's times of inflation, because the amount that you need to protect may need to change. And also, one of the big uses for endowment policies was a means to repay mortgages, and I'll touch on that later on. So now I'm going to get on to some of the specific areas, some of which might be similar, but try and go through what happened on there. So mortgage-linked endowments. Interest-only mortgages was a big development in the UK market in the 1970s, 1980s. And it was a situation where you would just pay off the interest every year, but the capital, the principal amount, would remain there until the end. And then you'd build up an amount in an endowment policy to repay that. So the idea was the amount that was built up in that endowment policy was at least enough to repay that mortgage. That was the theory. But that gives rise to uncertainty. How do you know that the amount you're building up in that endowment policy is going to be enough? Because it's either in unit-linked funds or it's in participating funds or what have you. How do you know it's going to be enough? And of course, the industry said, don't worry, trust us, there'll be enough money. And that was sort of how the selling and the marketing was done. But it was a major shift. And the banks and the building societies, or the savings and loans, loved this, because what they wanted is they wanted the maximum amount of loans in the economy, because they were getting their turn on the interest. That's where they were making their money. So actually, they encouraged and stimulated this, because what they did was they said, if somebody who wants to borrow for a mortgage takes out an endowment policy and an interest-only loan, they can pay 0.5% less on the interest. So, of course, it's like in going into the supermarket, special offer. So, of course, if you're somebody like me, you say, oh, I'll pay less interest. What you don't realise is that actually you're paying the premium in the endowment policy and the interest. So really, how do you compare apples and oranges, as we say, because it's slightly different. But the banks were really encouraging this through their interest pricing. And the government wanted more and more people to buy their own homes. There was a big drive for home ownership. So you had the government, you had the banks stimulating the growth of this endowment mortgage market. And when investment performance is good and strong, of course, there's going to be enough money in the policy, it'll pay off the mortgage, and you'll have some money left over. Great. What happened was, though, that over the years, that didn't happen. So when the investment performance was not sufficient to pay off the mortgage, you effectively had individuals who had a mortgage repayment obligation that they couldn't meet. And, so we had plus during the early years, lots of sales, lots of growth, encouraging the housing market, minus later on, because of investment performance, didn't quite work. And the risks of this happening were clearly always there. Question is, were they properly explained to the consumer at the first place? And I think that's really where the weakness in the advice and the sales process is. It's fair enough to have the products. I wouldn't say there's nothing wrong with the products. I have an interest-only mortgage myself. But I'm clever enough to work out when and how I want to repay it. But many of the consumers there, they weren't strong enough and financially literate enough to understand the risks, and therefore they were just taking the advice as given, and the advisors themselves quite often didn't understand those risks. What we have now is we had a big compensation for mis-selling that happened towards the early 2000s, probably got cleaned up by about 2005, and you now have the current regulator, the FCA, is consulting on the banning completely of interest-only mortgages, which I think is unnecessary, but it's an interesting example where the regulatory reaction over the longer term is very much against the industry's interest. So that was really the first one, and the learning on there. Consumers not understanding and the industry exploiting the situation, and the regulator taking quite a long time to work out what was going on and what it needed to do to sort it out. Reviewable protection policies. I'm not sure whether you have these there. What these are, so think of term assurance or whole life, is you'll pay a level premium for, say, the first 10 years, and then the life assurer will review based on your age what the premium should be for the next 10 years. So the premium will always go up because your risk is higher when you go up. So the idea is, rather than paying one premium throughout the whole of the term or the whole of the life, you're paying in steps. So fine, when you're younger you might be only able to afford a small amount of premium. But the problem was, when the life insurers illustrated what the increase might be, they were underestimating. So when you got to some of these points, the new premium after 10 years in some cases was 3 times, 4 times the level it had been before. And of course this gave rise to complaints where the policyholder would say, well, I wasn't told that it might go up that much, I was told it would go up. And then they'd bring back some of the documents that they'd had with the financial advisor at the time, and the financial advisor hadn't kept his records and was a bit hazy originally. So in the end, the regulator decided that the industry wasn't rigorous enough in marketing and selling and advising these products. Again, it's not that the products were unsuitable, it's that they were unsuitable for some people and they weren't explained enough to be suitable. So another example where the industry not quite in line with what was going on and not quite in line, the regulator not being on the front foot. So personal pensions, and I've got 4 slides on this one, because this is where we had probably some of the biggest issues. As we saw before, there was a big impetus from the government and setting up all those regulatory bodies to stimulate more saving in pensions, that you would lock in until you retired. You couldn't get hold of that money until you retired. But the products were more like regular premium insurance. They were high front-end charges, high initial commissions, as I said before. And the reality was that they really should have been more like a bank account where people wanted to put money in as and when they wanted to, like a deposit account. And the high front-end charges destroyed the value for the majority of those pension plans. Many people put in money and some of them never even saw that money again. It was all taken away in charges, which is not really the sort of characteristic you want for a pension plan. Millions of people bought these pension plans, and indeed the government was accused of part of the cause of the mis-selling. But of course, like all governments, they sit back and they say, no, we're not to blame. And they were never found guilty of complicity in some of this. But we had many billions of pounds of compensation for people who said they were poorly advised either to save in one of these pension plans or to move out of them. Charges was a big factor in this. So what happened there was in 2001, no initial charges on personal pensions were allowed, no initial charges at all. And of course, some of the life insurers were still trying to pay commissions to salesmen and financial advisors to sell these products. You couldn't make any initial charges. The maximum you could charge was 1% each year of the fund. So you don't get a lot of charges. That was changed to 1.5% later on, but only for the first 10 years. This is a more blatant case where the industry knew very well that its pensions products only offered good value to money to people who maintained their premiums and their contributions for many, many years. And they were arrogant, and they failed to act on the warnings in some of the early years, and they ended up with a very unattractive product restriction, this 1% charge, which still exists today. That's the only charge you can make on these. We would never have ended up there if the industry hadn't been so arrogant in the first place. And this then links on to suitability generally. And because the government had this big drive for saving, there wasn't really much consideration of suitability of a particular product for a particular individual. Everybody was being presented with the standard personal pension that was out there, whether it was right or not for them. There were weak advice and sales processes, and although we had regulators there, as I said before, that were setting standards, they really weren't enforcing those standards, so those standards didn't have the effectiveness that they should have done. And I think that's really what some of the learning is. If that effectiveness had been better managed and better recognised earlier on, then we wouldn't have that problem. So we've had a massive compensation running into billions of pounds. You're seeing there's a common theme here on all of these. And then switching, I won't go through the details because it's the same story. This is where you would move your pension fund or your pension plan from one insurer to another, and each time you're incurring switching charges, or you may be switching out of your employer's scheme into a private scheme. Every time there was a switching cost. And of course the advisors saw this as a nice way of generating income, and there was more concern for their own income than there was for customer suitability. And again, this was all another part of the industry compensation cleanup. It wasn't just the life companies that were actually responsible, sort of irresponsible, if I use the word in here. Employers are also guilty, I think, of not having properly set up their own schemes. The situation we've had is that it was voluntary until relatively recent years for employers to offer schemes to all their employees, and it's only been through compulsion for all employers, and the most recent one that was introduced last year, auto-enrolment, and that means that every employer has to enrol every employee, whether part-time, and they have to make some contribution, even if there's a required contribution from the employee. So again, the employers themselves haven't done themselves any favours, because they should have seen the way that these trends are going to make sure that everybody has access to good pensions. And then probably the last thing I'll touch on is paying for advice. Commissions, as I mentioned before, was the main driver of motivation and activity in the life industry, selling these pensions, selling these life assurance. And the regulator, the FSA, back in 2007, set up a major consultation which lasted for about 4 years. Eventually, they banned, from the 1st of January this year, the payment of commissions on life assurance and investments. So, and a financial advisor selling those products now has to behave more like a lawyer. They have to say, I charge per hour, or I charge a fixed fee for giving you a health check, and there's no commission at all. We still have commissions for general insurance, so that still exists. We still have commissions for pure protection, like term assurance, but life insurance pensions, no commissions. And of course, that's a big, big shift on the market. What it's also meant as a downside is that individuals in the mass market aren't really being served anymore because they're the ones who really can't afford to pay fees. In the past, they've been sort of cross-subsidised. So that really, I think if I can leave it at that, by way of going through some of the themes. I mean, there's lots of other things I could talk about. But what we've had is we've had, in summary, changes to the regulatory bodies. Did we need all of those changes? No. Was having so many changes good? No. Every time we've had to have overheads and shifts. So I would recommend you don't go that route. You go through a more incremental improvement. Should we have had product licensing and product approvals? I think I would say possibly and probably. In the US, all products and all premium rates have to be approved. In the UK, the freedom is with the companies. Once the company's authorised, you can offer whatever product you want. I think that might have helped. Could we have got to the current position more quickly? Yes, particularly with compulsion. Has the industry really focused on suitability and treating customers fairly? No, but it is now. I think it's in the last couple of years, through pressure and experience and regulatory enforcement, I think we're finally getting there. So that's my summary. I hope you found that reasonably interesting, and I'm sure we'll have some questions and discussion. Obrigado por sua atenção.
Eu gostaria de agradecer o Simon pela apresentação. Dá para perceber pela retrospectiva histórica dos eventos na Inglaterra que o Brasil não é muito diferente, né? Até parece uma história meio parecida com a nossa, quando a gente observa a evolução dos atos regulatórios na área de seguros, fundos de pensão e obviamente, a indústria financeira. E chamou a atenção até um pouco o histórico que nós tivemos na Previdência, que nós tínhamos até 1997 e pós-1997, onde, a rigor, esses aspectos foram, de certa forma, endereçados, parte resolvidos, parte parcialmente resolvidos e parte por resolver. Me chamou só a atenção que o esquema de portabilidade, que no Brasil foi regulado logo na partida, na Inglaterra ele foi como consequência do mis-selling, né, a dificuldade na qualidade de venda. Eu vou passar agora a palavra para comentários para os debatedores. Eu pediria que a gente utilizasse aí no máximo 5 minutos para termos tempo suficiente. Passar a palavra primeiro para o Edson Franco, da Zurich Santander, fazer suas considerações.
Obrigado, Oswaldo. Obrigado, Simon, pela apresentação. Seguramente mais conteúdo, um conteúdo muito rico, que a gente gostaria de ter mais tempo para poder explorar. Agora, eu fiquei um pouco assustado, apesar do Oswaldo ter dito que o histórico é muito parecido com o nosso, eu fiquei um pouco assustado com o estágio atual de superregulação a que vocês chegaram no Reino Unido, restrições de venda de produtos, limites de taxa e de comissionamento. A gente conversava no almoço, você falava até eu dava como exemplo que no ano passado a gente levou 250 pessoas do banco para um incentivo. Não tá? It's not working? Eu acho que a tradução simultânea inversa não está funcionando aqui para ele. Está unidirecional. Mas eu comentava no almoço com ele sobre uma campanha de incentivos que no ano passado a gente levou 250 pessoas para Abu Dhabi, e ele dizia que até isso no Reino Unido é controlado. Ou seja, está ouvindo agora? Ele dizia que até isso no Reino Unido é controlado, ou seja, o regulador poderia até dizer que levar tantas pessoas para tal lugar é demais, né? Quer dizer, e tudo isso, fora o fato de que tudo isso acaba gerando um passivo oculto, porque, obviamente, ao final de um processo onde se considera mis-selling e as seguradoras ou bancos acabam tendo que fazer um write-off dos seus balanços de centenas de milhões de euros ou libras ou dólares para fazer frente a litígios e demandas judiciais posteriores, obviamente que isso gera um passivo oculto enorme, né? E tudo isso gerado, pelo que eu pude depreender, porque os clientes não entendiam o que compravam. Quer dizer, porque a gente falhava em explicar para o cliente o que ele estava comprando. Eu acho que no Brasil nós estamos num momento, numa transição, num momento intermediário, em que talvez nós ainda tenhamos tempo de instituir no mercado mecanismos de autorregulação que façam com que a gente possa implementar determinados controles num ritmo mais nosso do que do regulador, né? E até como proteção do consumidor e, em última análise, como proteção das nossas próprias instituições. Então, depois, acho que os comentários do Simon devem ficar para o final de todos os comentários. Talvez, se você puder compartilhar com a gente alguma boa prática. Eu sei que, além de Reino Unido, você também tem uma experiência em vários países. Talvez pudesse compartilhar alguma boa prática ou alguma ideia de como a gente possa implementar mecanismos de autorregulação que possam nos proteger um pouco.
Agradecer ao Edson Franco pelas considerações. Ao final, o Simon faz suas observações sobre as colocações efetuadas. Passar a palavra para o Claudio Sanches, do Itau Unibanco, para fazer suas considerações.
Obrigado, Oswaldo. Obrigado, Simon. Acho que a questão de suitability é uma questão que hoje no mercado está bastante em moda e os reguladores têm olhado muito para isso. Acho que o Simon deu uma visão muito interessante, muito boa, sobre a questão regulatória, sobre a questão dos erros que podem acontecer quando a gente não faz a coisa de maneira correta e o tipo de problema que a gente pode ter dentro das nossas empresas. Eu só gostaria de comentar dar uma outra visão da questão do suitability, que acho que no Brasil é até mais basal, né? Que é a questão de que nós ainda temos uma grande dificuldade em fazer com que os nossos consumidores, que a nossa população, se motive a comprar algum tipo de seguro de vida, que eles comecem a fazer qualquer tipo de poupança de longo prazo para poder garantir uma aposentadoria tranquila, né? E isso, de fato, é talvez um dos grandes problemas que a gente encontre hoje nas nossas empresas, de como fazer isso, né? E aqui, só de maneira anedótica, a gente costuma dizer que isso é totalmente natural dentro do nosso comportamento, né? Porque nós, seres humanos, somos programados para não privilegiar o futuro, né? E são alguns comportamentos que fazem a gente agir dessa maneira. Acho que o primeiro comportamento, provavelmente o professor Janete vai falar bastante nisso amanhã, é aquela velha questão de você economizar hoje para o futuro ou consumir. A nossa tendência sempre é de querer consumir, né? E se isso vale para a Previdência, vale para pension funds, imagine para seguro, onde você nem vê o dinheiro. Acho que a outra coisa é que nós, seres humanos, temos uma dificuldade muito grande quando a gente tem que tomar decisões complexas, né? Tudo aquilo que é complexo a gente tende a não fazer, a gente empurra para frente, a gente procrastina e não toma decisão. E a compra de um seguro de vida, o investimento num plano de previdência é uma coisa bastante complexa, se a gente está olhando muito lá na frente. E acho que uma terceira coisa para lembrar hoje cada vez mais nós estamos gerando complexidade na nossa indústria, né? Mais produtos, mais tipos de seguros de vida, mais tipos de plano de previdência. Nós estamos aí próximos de discutir uma nova legislação sobre previdência, onde a gente vai ter fundos mais complexos que vão trazer uma complexidade maior para os nossos produtos. Além disso, isso vai criar muitas mais opções para os nossos clientes. E também um outro comportamento muito tradicional nosso, que quanto mais opções a gente tem, mais a gente se atrapalha. Então, o mercado hoje no brasileiro, ele tem uma característica: as pessoas não estão tomando nem a decisão ainda de investir, de fazer uma poupança, de fazer uma previdência ou de comprar um seguro. Então, acho que esse é outro ponto que nós, como mercado, devemos pensar em como é que a gente passa por essa barreira para depois começar também a trabalhar na questão de risco, de questão de suitability. Então, não sei se o Simon vai ter tempo depois de talvez falar um pouco como é que essa barreira, né, do comportamento humano foi vencida na Inglaterra.
Agradecer as considerações do Claudio. Tem uma frase que o Simon menciona, consumers did not understand what they are buying and the risks involved. É interessante essa observação do Claudio com relação ao consumidor, mas nós estivemos fazendo algumas entrevistas com clientes private, eles também não entendem os riscos que eles tomam. Quer dizer, isso não é um privilégio da massa da população que a gente entende tenha menos conhecimento. É meio generalizado, tá certo? Haja vista, por exemplo, situações muito recentes de perdas que as pessoas tiveram em aplicações financeiras que eles desconheciam o risco. Então, essa é uma questão, a meu ver, complexa de ser resolvida, não é tão trivial. Passar a palavra agora para o Ricardo Aguida, para fazer suas considerações.
Obrigado, Oswaldo. Quero agradecer a oportunidade de estar aqui, na verdade, no Conseguro, para poder falar sobre um tema como esse, suitability. Agradecer ao Simon pela experiência que ele compartilhou no Reino Unido, e que vai servir para a gente até, pelo menos na pior das hipóteses, como um alerta para algumas situações. Pensando em suitability, quer dizer, como ela cria, na verdade, ela ganha uma importância ou assume uma função nos mercados contemporâneos importante, assim, em mais de uma dimensão, né? Não só para proteger o consumidor na hora da compra, para que aquele produto seja efetivamente aquele que pode atender a sua característica, o seu perfil, e também as instituições que conseguem com ele ter um melhor controle ou administrar melhor os riscos que estão incorrendo nessas operações, né? Se a gente puxar esse fio, inclusive, melhora o atrito pós-compra, aumenta a fidelização de cliente, e até mesmo ajuda na gestão, se a gente vai puxando, na gestão de recursos, particularmente no caso de Previdência, porque hoje é tudo mais ou menos igual e que se compra tudo igual. A 3308 vai se modificar nesse sentido, vai ganhar complexidade. E a gente vai ter que efetivamente começar por a perfil de cliente, embora, para mim, a 4176 é um desafio. Ela, por si só, cria uma barreira para o suitability, quando ela regula o ativo, né? E mesmo que eu pense em previdência como de longo prazo, tem aqueles clientes que já passaram pelo longo prazo. Então, regular o ativo sem levar em consideração as características do passivo restringe a nossa possibilidade de fazer um processo de suitability bem feito. Agora, pensando um pouco no processo de discussão de suitability aqui no Brasil, ele ganhou corpo, na verdade, tem acho que uns 4 anos. Acho que o marco é uma deliberação do COREMEC, o Comitê de Regulação e Fiscalização dos Mercados, que eu nem sabia, na verdade, que ele existia, né? Começou em 2006, mas é o Comitê de Regulação e Fiscalização dos Mercados financeiro, de capitais, de seguro, previdência e capitalização. Nessa deliberação número 7, que, se não me engano, saiu lá em 2009, no mês de junho, já previa uma recomendação aos órgãos que compõem lá o COREMEC, que é a CVM, Banco Central, SUSEP e Previc, que estabelecessem normas para a adoção de suitability para as empresas ou para as instituições supervisionadas por esses órgãos, né? A primeira talvez que tomou iniciativa nesse sentido foi a CVM, isso em 2011, colocando em audiência pública uma normativa, uma instrução normativa, obrigando a adoção de método de suitability. Até hoje, na verdade, nenhuma instrução normativa foi publicada, mas na discussão que veio de lá, a Anbima já estabeleceu regras no guia no Guia de Melhores Práticas, estabeleceu diretrizes e a obrigatoriedade para suas associadas de praticar suitability, né? Tanto que grandes instituições hoje já estão fazendo o API, como foi traduzido aqui para o Brasil, que é análise do perfil do investidor, para todos os produtos de investimento praticamente, e na corretora de valores ainda mais, porque ele tem um programa, o programa lá de certificação de boas práticas operacionais, que também exige o API, né? Eu acho, então, oportuno, já que efetivamente vamos aumentar a complexidade dos produtos, a gente usar, ou pelo menos a indústria começar a discutir, como estamos fazendo aqui, suitability, e até mesmo evitar esforços de tentar, por autorregulação, chegar a, como foi comentado aqui pelo Edson, antecipar-se ao regulador e já começar efetivamente a adotar práticas nesse sentido, para que a gente não venha a ter problemas como até foram citados aqui pelo Simon.
E agradecer as considerações do Ricardo. Acho que foi bem lembrado, até em conversa hoje de manhã com o superintendente da SUSEP, ele reforçou a importância do mercado caminhar na linha da autorregulação. É importante o mercado caminhar na linha da autorregulação, só que não é tão trivial. E eu acho que foi bem colocado essa observação do Ricardo sobre o CODEMEC. Na realidade, o suitability ele já vem sendo previsto lá atrás, na regulamentação do CODEMEC. E, a rigor, nós chegamos a introduzir um primeiro nível de suitability na regulamentação da Ambima. Existe um primeiro nível de suitability para a segregação, pelo menos, daqueles ativos que são de longo prazo. Mas, de qualquer forma, é um tema que o mercado deveria se antecipar ao regulador, até para evitar esses conflitos que normalmente surgem quando da ocorrência de regulamentação, como foi o caso até da 4176. Passar a palavra agora para o Leopoldo, para as suas considerações.
Oswaldo, obrigado. Bom, acho que aqui no Brasil, como também lá fora, quer dizer, o pessoal se move um pouco com a crise, com o risco. Quer dizer, aqui no Brasil, durante a crise de 2008, a gente sentiu, principalmente as empresas exportadoras, tá me ouvindo? Tá traduzindo? Principalmente as empresas exportadoras aqui no Brasil, elas tiveram grandes problemas com os derivativos, principalmente os derivativos de FX. Está ouvindo? Não? Deixa eu trocar agora. Está ouvindo bem? Está ouvindo? Bom, só repetindo um pouco, aqui no Brasil, acho que durante a crise de 2008, nós tivemos um problema bastante sério com os derivativos, principalmente os derivativos de câmbio, né, de FX, e várias empresas tiveram prejuízos muito elevados com esses derivativos. E a partir disso, acho que acabou motivando, foi um motivo adicional, a CVM em 2011, como o Ricardo já colocou, a fazer essa audiência pública, mas efetivamente quem tomou acho que a dianteira com relação a isso foi a Ambima, através das suas diretrizes, e que todo ano começou, acho que com o private banking, no início, depois passando aí para varejo e passando essa preocupação para as outras classes também, a necessidade de adequação, né, do perfil dos investimentos ao perfil do investidor, né? Eu acho que um desafio maior para a indústria de previdência, já como colocado aqui com a 4171, eu até estava falando um pouco tempo atrás com a Mara Luque, um comentário dela que foi justamente um grande desafio que a gente tem com essa nova legislação, que é os investidores que estiverem prestes a se aposentar, como é que podemos fazer, já que a 4176 aqui no Brasil ela está estabelecendo um piso de risco, né? Onde que você tem que manter um mínimo de duration a partir de 2015. Isso acho que vai ser um desafio maior para para a indústria de previdência, e como fazer essa adequação vai ser bem importante. Eu faço uma pergunta ao Simon, quer dizer, pela experiência que você tem, Simon, os investimentos e a alocação dos recursos, com que periodicidade você acha adequado fazer a revisão ou a realocação dessa adequação entre os investimentos e o perfil do investidor?
Eu agradecer as considerações de Leopoldo. Como nós estamos aqui adiantados no horário, passar a palavra para o Simon, para ele tentar sumarizar as colocações e perguntas que foram feitas, para a gente concluir o painel.
Come here, it's probably easiest. So the first one was self-regulation, which I agree. I think if you can get a self-regulatory environment, that will be a much better and more productive one for you. Some of the areas there, I think, is working together between the industry and the politicians and the government and the regulators, so that you have a shared vision, I'm sure, for society. Just the fact that you're operating as an industry with profit motive doesn't mean that you can still operate, you know, a different set of ultimate motives for society. So I think shared vision, openness and honesty, because I think the behaviours working with politicians is something that wasn't right in the UK. So I think if you can learn that and get that right now, that would be hugely helpful. I think the other thing that I would recommend is actual measurements of outcomes, so that you can say, or I would say each year, what value and what good conduct and what good outcomes have been delivered to consumers through the activities and the business of the insurers. Because that focus on the outcomes of all the things I've learnt, that's what gets confidence, gets trust, and gets a willingness maybe to allow a self-regulatory environment to operate with less intervention. So a much more collaborative approach, I think, is my answer to the first one. Clearly, professionalism is very, very important in all of that, and that's professionalism not just from people like you in the room here, but also every financial advisor and every member of staff who deals with your customers. So that's my answer to the first one. On the second one, which was a very good point about financial education, financial awareness, that still is a big issue in the UK that hasn't been solved. The FSA undertook a series of prototypes with school children, university graduates entering the job market, factory workers, the elderly, the less well-off. They've tried different techniques, they've tried games, they've tried seminars, they've tried leaflets to try to get people to better understand. And interestingly, to pick up on Osvaldo's point, we found that the very rich, the high net worth people are, in some cases, less aware and less financially educated than the average people. And they rely entirely on their financial advisors. They do everything their financial advisors say. So there isn't a correlation between necessarily between your wealth and what have you. So the government's tried many things. The big challenge we've had is it takes generations to change older people. It's easier to change younger people. Younger people, particularly, they might like their iPads and their iPods and technology. So I think there's a great opportunity to get people now in their 15, teenagers and what have you. So we really haven't overcome those barriers in the UK. So I haven't got all the answers, but we've got some experience of things that have tried. What the regulators trying at the moment as a solution, they're not giving up on literacy, is basic products, simple fund options, simple charges, and saying for the mass market, if you don't want a financial advisor or you don't want to pay for somebody, but you should save in a pension, go with this simple basic product and you can't go far wrong. Now that sort of takes me into the third point, which was this question of suitability and optimality. I think it is how I describe it. Can you always look for the best fund performance or the perfect assets? Or is it better just to go with a good solution that's satisfactory but not necessarily suboptimal? But you still got to go through attitudes to risk or your API technique you've got, financial health checks, but you might have a simpler form of things which might help to bridge the awareness gap in. We're trying to get some action. In many cases, it is better to save than to spend, but it's making sure that when you do save, you're saving in something that's reasonable. And the fourth point was the example given of the derivatives and how do you link investment asset types and asset classes in. It reminded me also, I didn't touch on it, but one of the worst problems, and it was the banks particularly that were selling them, they were called structured capital at risk products. And the idea was you'd put your money that was previously in a deposit account and you'd move it into one of these life plan investment bonds that would last for 5 years, and it would say, if the stock market goes up, you'll get 30%. If the stock market goes down, you'll lose 30%. Now, you can take a risk. It's like a gamble, because you might lose. But who were the banks selling these products to? Little old ladies, little old men who had a zero attitude to risk on their capital. So, very, very unsuitable. So, matching asset classes with the right customer. It shouldn't be impossible to get the sales process and the financial health checks right. Frequency of reviews, in my experience, if you're saving for the long term, you might have 20, 30 years to go. I don't think you need to review your particular assets that frequently, maybe every 5 years or so. The key is the time between now and when you may want to or when you plan to retire. So, for example, in my case, I'm 57. I want to take my pensions when I'm 65. So I'm thinking I've got to track every year now, do I de-risk my assets or do I stay invested in some of the higher risk asset types? 20 years ago, I wouldn't worry about that. I should be in the higher risk asset types. So it depends. My answer is really it's the time to go rather than necessarily how often should you do it. But if you are lucky enough to have a financial advisor, the financial advisor should be working out whether it's a brief annual health check or every 3 years. It's almost like your own physical health check. You know, how often do you want to do that? So it's a simple answer, but that's the sort of answer to those questions. Have I covered broadly, I think, the points that you've raised? Yeah.
Okay, I'd like to thank to Mr. Simon for his presentation. Agradecer ao Edson Franco, o Claudio Sanches, o Ricardo Aguida e o Leopoldo Barreto. Como nós estamos com o tempo esgotado, vamos encerrar a apresentação por aqui, que eu acho que foi bastante interessante e bastante enriquecedor em termos de informações. Então, obrigado a todos aí.